The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals.
There you go.
It says come in and browse.
That's right. Come on in, listen up and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You don't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browsers.
with your host, Brian Damico.
Hey, look at us, we're browsers. One more win out of you and he gets it, all right? Come on.
Welcome to another edition of our show, Easy Money New England, where every week we bring you money-making opportunities or money-saving ideas, all in the areas of real estate. And today, it's not in just the areas of real estate, but also finance. And we have a certified financial planner with us today. His name is Mark Willis, and he's a #1 best-selling author and the owner of Lake Growth Financial Services, a financial firm in Chicago, Illinois. Over the years, he's helped hundreds of his clients take back control of their financial future and build their businesses with sophisticated, tax-efficient financial solutions. He specializes in building custom-tailored financial strategies that are unknown to typical stock jockeys, attorneys, or other financial gurus. As co-host of the Not Your Average Financial podcast, he shares some of his strategies for investing in real estate, saving, and paying for college without going broke, and creating an income in retirement you can outlive. Mark works with people who want to grow their wealth in ways that are safe and predictable, become their own source of financing, and create tax-free income. Also, all in retirement. So, Mark, welcome to our show.
Hi, thanks for having me. I appreciate it.
So, Mark, look at a little bit around the internet. Very interesting that one of the things that kind of sticks out to me is how to be your own bank. That's kind of like a big catchword for me because I own a mortgage company and, we give out mortgages and we know how much it costs throughout the years when you pay off your mortgage. It's basically 75% more of the actual loan amount. How do you become your own bank? What is that all about?
Well, it's a strategy that's been known by the, elite wealthy for many years. I mean, there's private banking fellowships across this country. And, I just finished a book called Debt, the First 5,000 Years. If that gives you any indication, banks have been around for as long as time. And they've literally been the biggest buildings in town, right next to the church. In fact, I noticed when I was in school in Texas that all these little tiny towns in Texas had 2 buildings and sometimes 3. The first building, was the bank. The second was the church, and the third was the bar. And I think that's kind of the order we kind of move our lives through. Financially speaking, anyway.
Yes.
I feel like, if we can just learn how to become our own source of financing, we'll capture back all the money. If you think about the average American, according to the U.S. Bureau of Commerce, 34% of our income goes to pay banks, credit cards, mortgages, auto loans, student loans. The list goes on. And if time is money, that means a third of our day is being spent slaves to a bank. If you add the Internal Revenue Service on that, that might be half our day going to work for somebody else.
So we're going to get into that, right? We're going to, how do you become your own bank? I mean, is that you just don't wake up and say, all right, tomorrow I'm my own bank. I'm going to borrow from myself. Right? How do you get in position to be able to do that? Because that's very interesting to a lot of our listeners. Is they're going to the bank to get financing, again, their car, their real estate, their home, everything you have comes with a monthly. I mean, you can't even listen to the radio anymore without having a monthly debt.
Yeah, yeah, it's true. Well, so I'll tell you first a story, and to be a real bank, so to speak, and the one that we know about on the corner, and such as you might do your savings and checking with. That's not really what I'm talking about. I'm talking about the need for financing in our lives, which is tremendously greater than our need for retirement income, at least for most of us right now. If your clients are anything like mine, if your audience is anything like mine, we've got cars to buy, we've got houses to pay for, we've got kids to send to college, and then most of us end up in retirement with nothing to our name. to show for it. So part of my work as a certified financial planner is how do we take care of the whole of life to help finance our need for purchasing those big ticket items without going broke in the process. And, there's two ways we can do it. The first way is you get a bank charter from the banking commissioner in your state or at a federal level, and you need to have about $100 million to do that. So that's the first way to do that.
Let's cross that one off the list.
Years.
Yeah, let's cross that one off.
The other way to do it, funny enough, of all places, and again, having done some research on this, going through my due diligence and looking at about 400 financial products and vehicles out there, there is a financial vehicle that has all the elements in place to do the banking function in your life, and that's, of all places, a dividend-paying whole life insurance policy. Now, when I first found that out, my mind shut down because I had been taught, like any good CFP, that no way in heck should I be putting my money into a dividend-paying whole life policy. I should be packing my money in a 401k. I should be throwing it all on the Wall Street casino, paying down my mortgage early, whatever I need to do other than that. So how in the world can we use whole life insurance as a means of financing our real estate ventures, buying our cars, doing the banking function that we'd otherwise have to outsource to, some of these mega banks down the street?
Wall Street casino, I like that one.
You bet. Yeah. So, by taking a look at it a little deeper, I really started to realize, and maybe your audience is aware of this, but I certainly wasn't when I first started researching this, that there are two kinds of life insurance out there. There's term insurance, the kind you rent basically for a certain period of time, and then the landlord raises the rent on you or kicks you out if you're unhealthy, right?
Yep.
And I found out, too, that 99% of term insurance doesn't even pay a claim. Most people, it just becomes too expensive for them.
Right.
So the other way to get life insurance is a permanent kind of life insurance. It's using cash value or whole life insurance. And, this old-fashioned life insurance has been around about 200 years. The stuff I had kind of been taught was super inefficient. And, Brian, it's like having a big battleship when you're trying to go a long distance in a really short period of time. You're never going to get there with the old-fashioned stuff that our grandparents probably had in their savings.
Right.
So this is a kind of a new, more modernized, more efficient type of whole life that builds living benefits, basically not just a death benefit, but living benefits, stuff you can spend while you're still alive, big piles of cash that accumulate very quickly, and they kind of function like other cash equivalents in your portfolio. Think like savings accounts, money market accounts, savings accounts, CDs. But they give you a much better return on your money. Life insurance policies that are properly engineered for banking give you a much better return than a CD these days. And maybe most importantly, you can borrow against that cash and use it for anything you need. There's, unlike a 401k loan or a bank loan or something, there's no underwriting, there's no waiting for the money. You just get it. It's your money.
There's no penalty to draw early?
No penalty, no tax implications when you access it. Yeah, there's no penalty on the money. There's no loan origination fees or any of that. So if you had, let's say, just to give you a quick example, let's say you had $100,000 in the cash value of this policy. Some folks can have that in the very first year, depending on how you capitalize your banking system. Yep. So if you had $100,000 in that policy, and let's say you found a real estate deal that you wanted to buy, you felt like you could flip that property, for example. Let's say the property was, in a developing neighborhood days. Okay. Yep. You spend the $85,000 at closing for the property, the house, and you're earning the profits from the flipping of that real estate deal. And Brian, at the same time that you borrowed out that $85,000, your policy grew with interest and dividends on the full $100,000, even the amount you borrowed against.
Wow.
So I don't know anywhere else in the financial universe that lets our money do that with guarantees built in than a whole life policy. That was my big aha moment, and how I saw this really fit in with the real estate part of my portfolio is, wow, shoot, if I can get my money to do two things at once without any market risk, I can increase my yield on my real estate portfolio. I can increase the yield on my fix and flips and anything else I might want to do with real estate. As long as I've got the money in the policy growing and working for me over here, then I can spend that money, whether it's a car, a vacation, or an investment, and get a nice piece of arbitrage on my policy and still get whatever I was going to do over here with my real estate.
Pretty
does that make
interesting.
sense?
Yeah, it makes a lot of sense. I mean, the problem today is you see people on TV all the time. Like, for example, Joe Kernan, he says, you never go whole life policy. I remember calling up my financial guy and saying, Joe Kernan says whole life is it's a gaffe. And he's like, no, 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 no. I said, well, why is he saying that on CNBC?
Yeah.
And a lot of people, I mean, they just don't buy into the whole life. But there's a lot of benefits of whole life that, it's not just your insurance piece.
Right. Yeah, and certainly I don't recommend this to just everybody. There's a lot of people who don't need to be doing whole life insurance at all. But there's, I think, way more people who should at least see that this is an option for them. And it certainly has a place in someone's overall portfolio.
And the other part of it is it's when it's after-tax dollars. So when you take this money out, it's tax-free, not as opposed to all your other retirement accounts where you're going to get taxed when you take that out, correct?
Sure, yeah. Your listeners can Google Rich People's Roth. There's some really good articles out there written by other CFPs like myself. Trying to remember the guy's name right now, but he wrote a really good article in the last year or so called The Rich People's Roth, and kind of goes into some of what you're talking about there, Brian.
Very interesting.
Great point.
So one of the things, one of the things you say is the chosen asset class of the wealthy is real estate. I mean, is that, and that's kind of what I've always seen through my life is, it seems like the wealthiest people have amassed a lot of real estate. The real estate.
Well, I think you might have some opinion on this as well, Brian, but, I think there's really only 2 or 3 places you can put money, at least that have been shown over the last several thousand years to really give you some protection, growth, liquidity, and of course, the financial life that you want to live. Real estate is one of them. I mean, go back as far as the pyramids. They've been using real estate for thousands of years. The next way that the ultra elite tend to get their financial transcendence and independence is through purchasing and investing in businesses. And then finally, paper wealth is the least efficient way to get to retirement. Paper wealth would be things like stocks, bonds, mutual funds. And, according to Delbar, which is like a third-party independent research firm, the average investor in mutual funds over the last 30 years had a return that was way less than the market overall. And I oftentimes ask my clients, what do you think, on average, equity mutual funds gave investors in this country? Do you have a guess? Like, what would you suppose? What's common wisdom tell us that if we just stick our money, buy and hold in the stock market, what do you think we can get as a rate of return over a long period of time?
They're saying 8%, right? 8% a year.
8%. Yep. You bet. Yep. According to Delbar, these are real investors. This is before taxes and before investor fees, by the way. The returns were only 3.98%.
Really?
3.9. That's only beating inflation by about 1%. And that's the Wall Street roller coaster, right? And that's before fees. So, I still don't, poo-poo on stocks. I still think they have a place. But it should be, the fun money, the money you can afford to lose. Money you can put inside something that's going to be guaranteed and accessible to you. And then, generating income with real estate. Man, what a great combination. So that's where we see the whole life and the real estate go hand in hand.
And is there other vehicles inside of real estate where it may, a lot of people they don't want to manage their own property, and that's kind of the biggest thing. And then if they try to find a manager, it never works out correctly because they got the wrong manager. Are the different asset classes that you recommend, if it's more, if it's a REIT or if it's, we've been talking about DSTs as of late, or triple net leases and all that kind of stuff. Do you recommend any other asset class? Like, it's almost like a stock, but it's real estate.
Yeah, no, REITs are a great one for that. And you can structure a REIT to take advantage of some of the tax advantages of real estate without having to worry about the management costs or the closing costs and so forth. And you can typically, expect to get a slightly lower return than you might do on your own because you got to pay the REIT their expenses and so forth. But overall, it's a great place to pack money away. If you're an accredited investor, maybe look at open-end funds where you buy into a private fund that someone's doing. But of course, it's not SEC regulated, so you got to keep an eye on, their due diligence. Make sure they're auditing their books and that sort of thing. But yeah, there's a tremendous amount where you don't have to be the landlord. In fact, why not just be the mortgage company? I like to tell folks. I don't mean to give you any extra competition here, Brian, but right. What if you could move upstream financially, go from renter to owner, from homeowner to real estate investor, and from real estate investor up to mortgage lender.
Be the bank.
If you could be a private money lender, yeah.
Right. So if you're listening right now and you own a bunch of property and you're saying, what should I do with it? A great option is to kind of take paper on and say, look, this is what I want for the property. I'll take the paper, and you'll get your price because they don't have to go to a bank. They're not going to have all those costs associated, and you're gonna take that paper, and then who's better than you to foreclose if they don't pay because you already own the property before.
Smart.
But yeah, I mean, and you get a good rate of return, right? So I mean, you could set up that mortgage any way you'd like because you are, the person with the money makes the rules, right?
That's right. Yeah, I think that's the second golden rule. I think you're right.
So yeah, that's a really good point about becoming the bank as opposed to, a lot of people are out there with private money and they'd rather everybody else go do work on the property. They're just sitting there collecting their money every month. They're not doing all the work to try to flip a property. They're the ones going to get paid anyway.
Yeah. Well, and you don't need 6 figures, 7 figures to do this. So this strategy of becoming your own source of financing, let me tell you a quick story. I have one client who was really he was not a sophisticated real estate investor. I think he was a photographer by trade and was just starting out in life, packing away a little bit each month into one of these policies as we engineered it for him. The very first year, he pulled some money out to get some furniture for his own home, to get some photography equipment for his business, some small stuff, But 3 or 4 years go by, and he calls me up and says he found a real estate apartment building, 8 units, and he thought it was a good deal. So he used his policy for a down payment on his apartment building. And so he used the policy to pull about $30,000 out at that point and put $30,000 toward the down payment of this apartment building. And a private money lender actually gave him the rest. So he was in partnership with a private money lender. But he was getting growth on the $30,000 inside his policy, even as he was getting appreciation and rent money inside the 8-unit apartment building. Fast forward a few more years, now he's paid back the loan to the policy with the rent money. Okay, so he took the rent money, some of it, and just recycled it right back into his policy. And now he's got enough money in that policy now to buy out the private money lender. In fact, he's even going to be giving the private money lender some money for one of the private money lender's other investments. So this client of mine has now become his own mortgage company for others. And this is just a simple guy. He wasn't exactly taught this in my state licensing. I didn't get taught this even in my CFP education. Good to work with him.
So if you could tell our listeners out there how to reach you. I mean, this is interesting. I would like to kind of have you review some of my stuff, and it's very interesting subject matter. How do they find you, Mark?
Oh, thanks. Yeah. Well, 2 things. One, we've got a gift to anyone who would like to. I'd be happy to give you a copy of my best-selling book. We co-authored it with Pamela Yellen and several other advisors that are competent in this strategy. If you want to go to my podcast website, it's notyouraverageFinancialPodcast.com, and just click on the request a meeting. You can also go to our main company website, lakegrowth.com, and just make sure to mention when you schedule a 15-minute phone call. I'd be happy to sit down and chat with you guys for 15, 20 minutes. And it was a real pleasure to get to write that a few years ago, and happy to send you a copy if you'd like. So that's a great way to keep up with what we're teaching, and certainly feel free to reach out if you'd like.
That's great. So Mark, what would you, we have a lot of new investors that are just getting into real estate. Say they're 20 years old. What type of advice would you give to someone who's just starting out? They're just saying, all right, I'm out of college. I'm ready to, I know I want to be in real estate. What type of strategy or what type of advice would you give them?
Yeah, man, I'd say first thing I could say is, don't open up don't feel like you have to dive into this head first. Get with a mentor that knows what he or she is doing, and find ways to just blow up your income for a while. The very best thing you can do at this stage in your life is increase your income potential. Get those extra classes under your belt. Get those extra certifications. Get that pay raise. Don't feel like you have to jump into real estate or a brokerage account or anything right away. Invest in yourself first. If you're 22, 23 years old, that kind of thing. Once you kind of get a couple extra pay jumps under your belt, sock away every single one of those pay raises in something that you can access but don't have easy access to. You don't want to be spending this on Friday night. Every time you get that pay raise, just make it a secret account that you don't even see or touch, and just make it automatic. Make that monthly, make it hurt a little bit. $1,000 a month, $3,000 a month, $5,000 a month, whatever you can sock away somewhere. Before you know it, you're going to have 6 figures that you can dump into a property after you've gotten your education on how to do real estate investing, and you've got the big money set aside. Man, you can make some real money that way. In other words, don't feel like you have to jump into this right away. Learn from folks that you trust, and pack money away like it's going out of style.
Very interesting. Yeah, no, it's great advice. I mean, you got my mind spinning on becoming your own bank, because, the more you see it, it's the people that have already graduated through investing. It's almost like it's the light at the end of the tunnel. That's kind of where everyone's aspiring to be. Right.
So, man, you're so right. I mean, banks have got their grip around most Americans. The average American has less than $400 in a liquid fund that they could use for an emergency. That's according to a Federal Reserve study. Over almost 60%. So that means it's better than even. Every person you walk by on the sidewalk or standing in line at the coffee shop couldn't come up with money to fix a flat tire, or a broken arm or something. I mean, that they'd have to go into debt to cover those simple expenses. Folks need to really take another look at the power and opportunity of liquidity in their portfolio. Most people have all their money socked away in a 401k that's churning fees for the investment advisor, and they're taking on all the risk. So yeah, you're so right, Brian, that learning to go upstream financially and become your own source of financing, and then eventually become everybody else's sources of financing too. Man, that's where the money is really made.
I think you just brushed on it, but what is the shortcomings of real estate? I mean, there's pros and cons on everything. What's the cons on real estate?
Yeah, well, again, there's definitely some good reasons to do it. Some of the tax advantages, some of the long-term income streams that can come. But, if you think about it, what in real estate is guaranteed? We learned in 2008 the equity in our home is not guaranteed. Unless you've got a chain on the door, you're not going to guarantee you always have a tenant paying you an income stream. I mean, they could leave or squat and not pay. So the income isn't guaranteed. And it's really hard to get the money out of the house. Even if you do somehow appreciate your home value to, a nice chunk, and you've got some nice equity in there, you got to ask a banker and go through underwriting to get access to the money. Not to belabor the point, but the whole life policy is a big bucket of guaranteed money that's liquid and grows every year and pays dividends every year the company's profitable, which, is sort of, it's, I think, a nice counterbalance to real estate for all the benefits that real estate offers. I kind of feel like if you add a well-designed, engineered, modern whole life policy next to your real estate portfolio, it's kind of like nitro and glycerin. They kind of make each other even more powerful.
That's great. I mean, it's I'm definitely going to go get that book right away, Becoming Your Own Bank. I'm definitely on top. I'm going to actually take a look at your book. Fascinating topic. I mean, this is stuff that really gets me up at night thinking about things. But I mean, 5% more of that mortgage balance. And if you have property and you're finding ways to maximize or get smarter in your older age, and maybe looking to just create more wealth for yourself and set it up for future generations, I think Mark Willis would be the different person to contact. So, Ed, you ever, you're near retirement age. Do you have any questions for Mark?
Questions? No, I mean, I've found this fascinating because, for 30 years, people have been telling me, buy term insurance, invest the rest. Right. And, I think there are other strategies that can also work. I feel lucky to have a good financial person, so I'm not on the average return rates. But even so, it's certainly... It's a time where, and I suppose it happens in real estate too, the market is a very stressful thing. I think that's another thing that a lot of people don't think about, is what their risk tolerance is. And it's very rare that real estate will go down to zero, but if you're playing with volatile stocks, you can pretty well lose everything you have.
Well, they say it goes up the stairs, but it falls out the window when it falls. So you don't really have much time to adjust. All right, Mark, in closing, do you have anything else you'd like to say, or anything you'd like to say in closing?
Well, no, I'd say, the very best thing you want to do is look for someone who has the expertise to give you some feedback or a real evaluation of what you are wanting to do financially. Where your money lives makes it do different things. I know that sounds obvious, but we oftentimes are just told to put our money in a 401k or told to put our money in our house or told to put our money wherever. We're all given advice, but or lack thereof in my case, right? So I would just say take a look. Call on someone who's gone through certifications or accreditations. I went through the Bank on Yourself Authorized Advisor training program to make sure that I was designing these things correctly for our clients. And then just see how it fits in the overall portfolio. What else you're trying to do. It can go couple really well with stocks. If you've got a great market year, pull from the stock market portfolio. If the markets are down, don't pull from your stock market when the markets are tanking. That's like a double hit. Instead, you could pull from something that's guaranteed on the down years and give yourself a way to tame the bear market, as they say.
For people that have
keep up the good work, guys.
For people that have 401ks now, and they could convert them, would you be a proponent of liquidating your 401k and going into a different type of retirement strategy?
Well, if you've retired, you typically can take your 401k and roll it over to a tax-deferred IRA or do any kind of Roth conversion to other Roth IRAs, and we certainly can help with that as well. Not just looking at these non-qualified assets like life insurance. We can look at any kind of tax-deferred implications like IRAs, 401ks, SEP IRAs. We've got basically access to help you with anything that you're trying to accomplish with your retirement. But the key is, what are your goals? What are your needs? What's your tax bracket even going to look like? What are taxes going to do in the future? It's hard to tell in this country right now. You'd want to sit down, take a look at everything from a high-level view, sit down with someone who kind of has the questions to ask you, and then you can make your decisions on where you put your money. Because, again, where you put your money makes it act different. So make sure that it's acting in line with your goals.
Yeah, because a lot of people don't feel like that 401k is really their money until they get retirement age. But it truly is their money. I mean, they could do other things with it. They could buy real estate in it. Right. They could do a lot of things with it.
Had someone who recently said that they were just sick and tired of the market throwing them around. We had a 10% market correction. What was that, back in February? Yep. And they said, Mark, I just realized one day this guy was probably 45 years old. So if he was going to take the money out of his 401k, it wasn't just going to tax him, but it was going to give him that early withdrawal penalty of 10%. And so he said to me, Mark, I realized I was going to get taxed anyway whenever I took the money out. And then he said, but I realized when I lost 10% in the market, I had already hit my early withdrawal penalty of 10% just because the market took it away from me rather than Congress taking it away from me. And I said, wow, you're right. Any market correction of 10% is the same exact experience of taking your money out of a 401k as an early withdrawal. There's literally no difference there. It's still just someone else taking the money away from you. Money that should have been yours, but now it's vaporized to the market or it's in the IRS's hands. So, with you on that. Some people are waking up to the fact that they can do more with their 401k than just hand it over, leave it with their employer, and I think that's a good thing.
Yep. Great. If you guys want to know more information on all this, definitely reach out to Mark and. Ed, let's roll the music.
You need some music?
And like we always like to say on Easy Money New England, there's no such thing as easy money. And if you know of anything that is easy money, let us know. Reach out to us reach out to us at easymoney@newfed.com. Thank you very much. See you next week.
It's a new day, it's a new way. Call 877-NEW-FED-1. It's a new way.
Hi folks, it's Brian Damico, owner of NewFed Mortgage. People always ask me, what's the difference between pre-approved and pre-qualified? Well, pre-approval is a more rigorous process than a pre-qualification. It's a written commitment from a lender to extend a mortgage to you for a specific amount and time period. With a pre-approval, you'll be able to set your budget, negotiate confidently, and close faster. Typically, sellers will only accept offers from those who are pre-approved. That's why you need to call NewFed and ask about our pre-approval purchase program so that you get a real pre-approval and get on the fast track to purchasing the home of your dreams. Don't waste time dealing with big banks. Get pre-approved at NewFed today. We're local and we're here to help.
877 NewFed 1.
Subject to credit approval, equal housing lender, NMLS number 1881. Policy website for details.
877 NewFed 1. It's a new day, it's a new way. Call 877 NewFed 1. It's a new way.
Hi folks, it's Brian Damico, owner of NewFed Mortgage. I've met so many people who want to make money in real estate but just don't know how. They pay for expensive real estate courses and seminars and they just left more confused. This is why I wrote the book, Real Estate Riches. Take the first step and buy your first home. Whether you want to buy your first home or an investment property, I share some of the best secrets to real estate success in my new book. Just visit briandamico.com/free book to receive your coupon from Amazon. When you finish reading, give me a call so we can set up your financial future together. That's briandamico.com, briandamico.com/free book. Sign up and receive your free book from Amazon. Subject to credit approval, equal housing lender, NMLS number 1881. Policy website for details.
877 NewFed 1.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.